Good morning from Chicago, traders. It's 8 a.m. Chicago time on the 28th of July, 2021. This is episode number 2043. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's get down to it. In our pre-market summary sheet this morning, we have a market that's seeing mild risk on. We've pushed in the S&P to a key area at 4404 again, this morning, and so we are really bullish in terms of where we stand against the prior auction. This morning we have a lot of pre-market, pre-open releases. As you can see there, we had Boeing, General Dynamics, Teva Pharmaceuticals, Bristol Myers Squibb, McDonald's, Pfizer, Bunge, Barclays, GlaxoSmithKline, and Deutsche Bank, all taking place pre-market. Everybody surprised to the upside, with Boeing surprising 155%. Boeing came in at 40 cents, was expected to lose 72 cents. Big swing there. Revenues were down 4.4% from estimates. The other big surprise is Bunge came in at $2.61 versus $1.57. A 66% surprise on earnings and 34% surprise on revenue. And then after the market today, we're expecting Ford. We're looking for Ford Motor Company, expecting a loss of 10 cents. Facebook announces after the close, expecting a gain of $3.02 on 27 billion. And Qualcomm, expected to announce, estimated at $1.67 per share and $7.55 billion in revenue. So earnings front and center, but of course today we get the FOMC interest rate decision at 2 p.m. Eastern. 2 p.m. Eastern. Those of you trading energies are going to look out for an expected draw of about 3 million barrels on EIA crude oil stocks at 10:30. Again, Fed's interest rate decision at 2, Fed's press conference at 2:30. Today is a special day in the markets. Again, not a good week to miss with all the earnings and this big rate decision. But overall, the S&P has been balanced in the overnight session, has a bit of an upward skew, and has been holding near highs, near, again, as I said, 4,400. The volume is relatively high against what we would consider to be common at 190,000. Volume today is 212,000 contracts for the session. Inventory is 95% long. Again, I know people always ask what that means. It means 95% of the volume in today's session occurred above yesterday's closing or settlement price, which are generally within a few ticks of each other. And so that's where we stand. The range is 25 points, pretty decent for an overnight session. We're pushing up against the 4,400 century figure in the S&P. The leader today is the Russell. If you recall yesterday, the Russell was down 14 points pre-open. Today it's up 14 points. This thing is really whipping around in what looks like a pretty high volume area on the composite. So the small caps kind of leading the pack here. Crude oil popping higher to $72. Crude has pulled back a ways last week and is making a bit of a recovery. Gold is trending down overnight below its VWAP. The VWAP for gold for the overnight session is 1,800 and a half, $1,800.50, and it's trading at just below that by two full handles, $2 basically, and silver is remaining strong. Overnight, Bitcoin futures pushed, I believe, as high as $41, which is a key resistance area above $41, continuing to pop higher on, again, news from Tesla and, more importantly, Amazon. Yesterday, it's recovering from coming back from going from under $30,000, which has been the floor for it, and pushing up $10,000 in the last 2 days. So very interesting stuff going on in the markets, a lot to talk about. So let's move on. This here, what we're going to look at is what was expected yesterday. Given the configuration of the market, given that we were balance on top of balance here, I was looking for a slight push up to as far as 0809, but the most important thing yesterday was we take out the 43.97, and then as soon as we do, the expectation is we would flush down in an impulse and then follow it through with another impulse down into 71 being the MC point of control, or the high volume node down here, an old MC point of control, which is now an MC high volume node, expecting it to push to 71 and potentially as far as 67, which is the gap mid. There's a weak structure beneath there from the run up, and that's basically what happened. Here's what yesterday looked like. Here we go in the review segment. Pretty interesting action. We had a quick rundown. Oop, why is it blue? ¿Por qué? Let's see. All right. We had a quick rundown right off the open. If you look at this, you'll see that there's an immediate push down, impulse down, an actual impulse down of 11.75 points. Not expected. I expected it to chop here and attempt to push higher again as far as 44.08. Did not see that at all. And then it just came right back through, whipped back above the full session VWAP, and it's just very, there were a couple of opportunities here. Pull back to mid here at 98, and some VWAP pullbacks that held pretty well yesterday. It ended up pushing through the initial bounce low at 85 and getting down into the, it put in a double bottom, a local double bottom here at 64.75. So as you can see, marked in my master levels here, which are cloud-based, they're distributed to convergent members. There's a double TPO low that was put in yesterday, making this a weak bottom. And then from there, higher low. We talked about this in our trade talk yesterday at 1 p.m. And I said, hey, what would make you start to think about the end of the sell-off and to go into a posture of looking for longs? And took some answers in. It was a bit of a quiz. And the reply was looking for a higher low, looking for it to break through the 43.78 zone right here. So we have a bunch of resistance right there, this chop, and looking for an impulse higher. So there's the impulse. It got above our impulse limit on the rotations, and then it sets us up for a consolidation breakout, but caution on 82 to 86, the 82 to 86 area, and it pretty much, it's interesting, it pretty much did just that. It kind of textbook example of a reversal here, and it finished relatively strong, which we've seen over the last week or so, just strong finishes at the end of the day. You can see here the prior session finishing near highs, and but still under the 4,400. And the big area here, you can see there's a lot going on in that cluster there. Yesterday, the big area was 4,404, and this has been a fighting area for the ES for a while, and that's where we are now, or basically the overnight high is 4404.50. So yesterday, elongated profile, pretty active price discovery to the short side, but what it did is it left a wick in our candlestick formation. It left a wick, a pretty long wick, and basically a rejection of lower prices, although it left behind a weakish low. So keep in mind that 64.75, you want to, in my opinion, you want to put a line there, a reference line, and label it on your charts. That becomes the next key target below, in addition to the bottom of the gap zone. So decent discovery yesterday to the short side. Again, that was part of the plan. Somebody wrote to me and they said, man, everything I was seeing was the trend is up. How is it that you can predict that it's going to go lower? And my answer is, I'm not predicting anything. It's just a more likely possibility, given the action overnight, that it's overshot, it's overdone on the buy side. We're seeing that it has found sellers in the overnight action, and so the expectation is if it starts to rotate lower, that's why I always have a minimum of, there are actually a minimum of 3 scenarios, and a common theme is commonly there are 5 scenarios, but I just cover the 2 main ones. And if it does give in and give up the prior day's low and end the one-time framing up, then the next major area to test is 71. And you can see it pushed through the 71 by about 6 points or so before turning around. Does it have to be accurate at 71? No, because I'm not looking to get long at 71. I'm looking to trade with the flow and with the trend. And so 71 is just a target. So it is in my best interest that it actually runs through my targets. I want it to run through my targets, and I have no remorse and no attachment or feeling if it continues well past it by 10 points, by 15 points. It doesn't matter. It's not my trade. That's not my job. My job is not perfection. My job is to just ride enough waves in a day to make a living, period. I mean, and there are a lot of skills and steps to do that, but it's not my intention to sit here and be a perfectionist. If you're trying to be a perfectionist in trading, you're going to have a whole lot of anxiety and, I believe, a short lifespan, because the market just, you have to, it's like playing a sport. If you've ever played a sport, you can't be perfect in a sport. Sometimes perfection shows up. You know, you take that, you hit the attack in volleyball and it was a perfect set and it was a perfect hit and it was not returned, and a perfect strike. Or you take that jump shot in basketball and it's just, everything is perfect. But that's not what we're after. We're not after that. We're after consistent execution and consistent follow through, and most importantly, staying current and engaged with the market, with the context. Look at how much opportunity in rotations, given that this is a 4-tick Renko chart. Look at how much opportunity there was yesterday in the RTH session, which now ends at 4 p.m. Eastern with cash. Look at how much there is versus the prior sessions. There's a lot to do yesterday versus the prior day. And I'm expecting that today we'll have a pretty elongated day like today. A lot of rotations today in the FOMC, although I'm anticipating that it's likely to slow down relatively quickly. You could see that although we didn't get back over the open, the delta finished positive here. And so the expectation that feeds into the expectation that we would continue higher in the overnight session. We found a low yesterday. We finished strong. So we didn't find a high, or we didn't find sellers. Sellers are what causes a high to take place. And so as long as that has been the case, we would expect it to continue in the overnight session. And of course, there were massive earnings yesterday, so it's expected to respond there. Some volatility is expected. So we see a nice rounding top here in the S&P, and then what we see is a pretty clean V bottom right here. So the expectation, given how we're finishing today, or how we're finishing the overnight session today, the expectation is for continued push, and it brings us back to 44.08, which I mentioned yesterday, and we expect to attack that all-time high at 44.15 again, now that we're above the 4400. So yesterday was a minor correction back. It didn't quite clean up the weak structure at the gap zone below, but it found its buyers, and it's pushing higher. So we have to go with what the flow says, and what the flow is saying is, hey, we're holding sideways, we're steady, we are balanced in the overnight session. We've traded a lot of volume in the futures, and we're holding steady. Look at this trend line right here. We're holding steady, and I have to go with what it shows here, which is it's likely to just continue to push higher. Again, FOMC on deck today, so expect some positioning, expect some influence from the underlying sectors, key underlying sectors, banks, and so on. Expect some positioning, and then expect it to go slow. So this is a day where you need to remember what time of day it is. After the first hour, I wouldn't have many expectations. Definitely not after the European close, which is 2 hours after Wall Street opens. We have the European cash close. It's better to keep your bullets chambered and your powder dry for the FOMC announcements. So that's what we've got. Looking at the big picture, just a quick recap of what we've done. Here's the wick from yesterday that I talked about, and we are back into Monday's body, Monday's range. And so, 44.0304 is on deck from the prior week right here, the MC point of control of the prior week. This is a heavy area at 44.04, and we tested it overnight and pulled back a little bit, but we have not moved away. We did not reject the 44.04. We continue to push towards it. I'll show you that on my charts here, that there's a lot going on in that area. Here's a view from Edge Pro X. Look at that thing. This is my footprint chart called the volume imprint, the ladder. Look at this cloud that's forming right here. There's a lot of activity. There's a big fight. And it's unfortunate that there's a delay, so I can't quiz you on this, but there's a fight there on the push back up above 4,400, which it has tagged multiple times today. There's a fight, some selling and some buying. So you see those big lot clouds there. What is the most important information that we can glean from this chart from an order flow perspective right now? What do you think that is? That's this huge clue that we have here. I can't wait for your answer. The fact that there's this battle that took place here, and it's resolving upwards. This is kind of order flow 101, right? We're seeing a battle, and the sellers were unsuccessful in holding price down. So the effort was made by sellers, and those sellers are likely to be buyers now, and it's likely to continue to squeeze the overnight highs we come into the open of the session. And so our main idea coming into the open, based on the context behind it to the left, as well as what has happened here recently as participants position themselves for the open. This is the entire session here on a 4-tick Renko, and you can see that we've come up and fought this the first time. This is the third top. There's 1, 2, higher high, and we're looking to form another one. And you can see there's a battle going on right here, and it's not giving in. It's not giving up those prices. This is important information because in futures, for every contract that's bought, there's a contract that's sold. It's not like stocks where there's limited float and short interest and all. We don't deal with any of that. It's as simple as, for me to trade with you, you have to sell me a contract. I buy your contract, and the volume is always equal between buyers and sellers. So there are never more buyers than sellers. And so take that information one step forward. If sellers came in and they're aggressively hitting the bid and the market's not going down and it's holding prices, guess what happens to those sellers? They become buyers to cover. And so we're looking for this thing to squeeze higher on the open. After consolidating and forming a nice zipper here with higher lows, classic setup. I just gave you basically a classic setup, balanced profile, but the fight up here is forming a secondary distribution, so it's becoming a multi-distribution profile with a weak high. That's how you read that. So that's what we're looking at for today. Again, big fight up there. Looking at the heat map, we have some size at 44.05. Again, as I said yesterday or day before, the 05s, the 5 handle in the S&P are the strike prices for options. So in general, we see size every 5 points or so. There's a little bit of size, and we've got the nearest size, the nearest price right now is 44.05, and there's some size up there, but that's it. The order flow, the heat map's not giving us a lot of information other than we have the century figure below us. We've got this big messy area, stock zone, MC point of control, the prior high, the overnight high, the week's close. This is a tough area, but once it clears it and gets through to the other side, it is likely to be a runner, and again, it is likely to take out the 44.15. Let's get back to what's expected for today. One thing I want to remind you is that I will not be here for the Trader Bite tomorrow or Friday or Monday or Tuesday. I'm taking a break. Much needed. So I'll be gone tomorrow through Tuesday, back in the saddle, back in business. On Wednesday, I'll be monitoring the markets. I'll be doing the nightly homework for Convergent members, but I will not be here to do the Trader Bite. And for Convergent members, I will not be here to comment in the Head Trader channel on the open as usual. Okay, one more thing. Please hit the like button on YouTube. Hit the heart button on Periscope or Twitter Media, whichever one you're using. That helps others find the channel and keeps it available for other traders to find. My objective is to have as big an impact on traders, to have a long-term career as possible by showing you, and as I've done for the last 12 years, by showing you that we come in, we do the same thing over and over and over with minor adjustments as the market regime changes, and that's really has been the driver. So hit the like button before you leave. So here's the higher lows and so on. So there's a trend line here coinciding with VWAP. My expectation for this morning, open auction, expecting it to dip. Inventories, as I said, the overnight inventory is 95% long, expecting a dip. And then I'm looking for it to break through the 44 44.50, the overnight high, gets us the overnight stat, gets us above yesterday's high at 44.04. And then I'm looking for it to fight at the 05 with the size that's there, 356 contracts currently. And then boom, it works through the prior highs. Okay, so I'm looking for this thing to push, then consolidate, and then at some point today we get the FOMC. I don't know where that'll be on the chart, but we know it's at 2 o'clock. We get the FOMC, and I'm expecting the FOMC to be somewhat cautious, the FOMC to take somewhat of a cautious stance, but I'm expecting the market has had a successful seek and destroy mission of the sellers, and the buyers came in and took it back up. And I'm expecting that to continue because I'm not seeing a strong top having formed yesterday. So I'm and in the overnight session. So the natural thing for the market to do, barring news, is to continue higher. And with the crazy strong earnings that we've seen, just blowout earnings, why wouldn't it, right? So the secondary open auction, consolidate for a bit, choppy open, and then pushes the overnight high, finds sellers finally, comes back. The overnight point of control here at 43.96 gets us underneath the 4,400, tries to peak above, and then falls through, and then consolidates into the FOMC. And then from here, again, no idea which way this thing will go. The secondary scenario is expected not to see aggressor sellers. I'm not expecting aggressor sellers to come in, but essentially some profit taking in front of the FOMC. So I'm looking for it to fall to at least 43.96.95 from yesterday and consolidate there. But I'm not looking for a trend down. Now, after the FOMC happens, it's anybody's guess what goes on there. I'll be monitoring the treasuries, of course, gold and the US dollar to see how things are moving or progressing, which direction that's going, and then the reaction in equities, and then trading the third wave of the FOMC release. I know it's a lot of information. I'm going to let you go. It is 2.5 minutes to the open. I know this was a long one. I will catch you next Wednesday. Next Wednesday morning, I'll be here. I'll catch you next Wednesday. No trader bite tomorrow, Friday, or Monday, Tuesday. Okay? Please hit the like button. I'll catch you guys next week. Take care.